A troubling trend, Portugal's struggle with savings. A European dilemma, Portugal's unique challenge. In a recent European ranking, Portugal has emerged as the country with the lowest savings rate among its citizens, recording a mere 11.95% in the second quarter, as reported by ECO. This figure is significantly lower than the European average of 14.97% and the Eurozone average of 15.5%. The disparity between Portugal and the rest of Europe has reached its highest level in a year and a half, according to Eurostat. The Eurostat versus INE data conundrum. Eurostat's data reveals a stark contrast with the predictions made by the National Statistics Institute, INE, in September. INE had forecasted a savings rate of 12.6% for the first quarter of 2025, which was higher than the actual figure recorded by Eurostat. The discrepancy is attributed to differences in calculation methods and adjustments between the two institutions. A slight increase, but still lagging behind. Despite a marginal increase of 0.12 percentage points compared to the first quarter, Portugal's growth rate still lags behind most European nations. In the second quarter of 2025, Eurostat reports that the household savings rate increased in 9 European Union member states and decreased in 5. Finland, plus 2.2%, Belgium, plus 1.5%, and Sweden, plus 1.3%, lead the pack in terms of savings rate growth. Why are Portuguese saving less? The reasons behind Portugal's low savings rate are not straightforward, according to ECO. One possible factor is the persistent gap between Portuguese wages and the European average, making it harder for citizens to save. Additionally, the burden of fixed expenses like housing, energy, and food may be stretching Portuguese family budgets to the point where saving becomes a challenge. The investment rate, a silver lining? Eurostat sheds light on another crucial indicator, the investment rate. While the savings rate reflects income not spent on consumption, the investment rate indicates the income available for investments, such as home purchases or renovations. In the second quarter, Portugal's investment rate for households reached 6.27%, an increase of 0.28% from the previous quarter. This rate, however, remains below the Eurozone average of 8.96%. Consumption versus savings, a delicate balance. Household savings are intricately linked to consumption behavior. According to INE, consumption increased by 1.4% in the second quarter, while disposable income rose by 1.5%, leading to a slight recovery in the savings rate. However, the inflation rate continues to temper the increase in consumption. Housing investment, a European perspective. INE's data reveals that household investment, primarily in housing-related assets, increased by 4.3% in the second quarter. Yet, the investment rate of 6% is still below the Eurozone average. This suggests that Portuguese households may not be investing as much in their homes compared to their European counterparts. Portugal's place in the European context. Portugal's situation becomes even more pronounced when viewed against the European backdrop. Eurostat reports that real per capita household consumption increased by 0.3% in the Eurozone in the second quarter of 2025, despite a 0.1% decline in the previous quarter. Simultaneously, real per capita household income increased by 0.5%. This trend is similar in the European Union, where consumption and income are growing, potentially benefiting savings accumulation. The impact of taxes and social contributions. Eurostat highlights that the increase in real per capita income in the Eurozone during the second quarter is primarily due to workers' compensation and social benefits. However, current taxes and net social contributions remain significant negative factors in both the Eurozone and the European Union, impacting household income negatively despite wage growth. Conclusion: a call for discussion. Portugal's struggle with savings is a complex issue, influenced by various economic factors. What are your thoughts on this matter? Do you think there are specific policies or strategies that could help improve Portugal's savings rate? Feel free to share your insights and engage in a constructive discussion in the comments below.